Good morning, good evening, good afternoon, wherever you are watching this today. Today was a little bit of a quiet day in the markets. However, we do have a jam-packed week ahead. We have two central banks. We have the Bank of England and Bank of Japan announcing interest rate decisions, and we have a lot of important economic data starting tomorrow. For tomorrow, we have the UK and we have NFP as well as US retail sales, PMIs in the US. I'm going to unpack those things and also speak about what could happen to markets depending on the outcome. I'll go ahead and share some possible trade ideas. I have a very few of them. And of course, I'll give a quick update on my current active position. I have just one and I'll share how I plan to manage that. So without further ado, let's get right into it. So today was a quiet day in markets, but starting tomorrow, we do have some important information that's coming out of the UK. Will start at 2 a.m. Eastern time. We have UK employment data. So we have the unemployment rate, unemployment change, and then we also have some PMIs as well out of Europe in the Eurozone. We'll go ahead and monitor those closely as they can impact. Later down the week, we do have the Bank of England cutting interest rates. They're expected to cut 90%. And then we also have Bank of Japan as well, a very big one to watch. Later on tomorrow, as the day develops, we do have US unemployment rate, US retail sales, non-farm payrolls, average hourly earnings. Later, almost an hour later, we do have PMIs. We have services and manufacturing. Services makes up the most of the US economy, so traders will be watching that very, very closely. But let me go ahead and break down what can happen tomorrow. Out of the UK, I'll share this real quickly here. In the UK, there's two things going on that's really tricky to navigate. You have GDP as of the last one, December 12th, came in worse than expected. So we have some slowing growth out of the UK. Although CPI actually, did come down somewhat from the 3.8 previous, it's still elevated. So they have elevated inflation and sticky growth. That right there is what you would call stagflation. Now, I know this is not a very great handwriting. In fact, I would advise or recommend that you try giving this a shot on your computer. Writing on a mouse is very difficult, but you get the point. They have stagflation. That right there is a very tricky situation to navigate for the Bank of England. That is why, in my opinion, I do think there is somewhat of a cap to upside for the UK, even though we do have the Federal Reserve, cutting rates, or they just cut the rates and they're looking to cut one more time in 2026. And depending on the new Fed chairman, we may even increase that number slightly there. Looking at the pound dollar, one thing that I'm looking at here is on a very technical level, trying to see if this level here that we're at, I'll go down to the daily time frame. This was a level of resistance. We poked above and now we're trading below it. In fact, we never closed above really. We got this wick here and we still close within it, and then we've been trading within this range here. I'm curious to see if this is a turning point for the pound. Perhaps that can boost the dollar a little bit, just given that pound weakness. So I'm very curious to know. So I know short term I am bearish on the dollar somewhat. You have the RBA being hawkish compared to the dollar. You have lots of other central banks that are somewhat stopped as far as easing, and some even trying to hike rates like the Bank of Japan. I'm curious to see what happens. I would act with discretion here on a very small technical level. If we do get a break below here, I might take a short stab at it right here. So I'll have like a stop order here, like a stop limit order, and perhaps do a quick hit right here, maybe about 30 pips. This just depends on the move, right? So this is more of a volatility play. If the data out of the UK really does not perform well, then we can get a spike in volatility. And I'm just looking to target somewhere in here. So somewhere around this level would be like a take profit area. I'm not looking to stay in the move for a very, very long time, but this is just one of those opportunities that, if you get some more added bad data with an already very hard, not doing well economy, that could be a quick base hit there. So that's one thing I'm looking to do. However, if we do start to flip over and we do see a shift in trend as far as the dollar bearishness goes, because we have a lot of currencies at very important level. We have the Aussie dollar here pulling back, now getting into this level here that I was looking to be a buyer in. I was talking on the live stream today, and one of the things is you have to use discretion a lot, and discretion is what ultimately makes a system work well or not. So I was saying how you can have ideally like a checklist, and every time a pair gets to this technical level and the fundamentals look well, then you just execute 100% of the time because that is what your system says. I do believe in that to some extent. However, you can go ahead and eliminate some unnecessary losses if you just stay patient. I want to see what happens to this Aussie dollar here at this level, right? If we get into this level and it starts to trade slightly lower, then perhaps this can can be somewhat of a shift in trend, and I'll stay away from it, from there. However, if we do get here and, my ideal situation happens where I can trade the Aussie dollar back up here, I would like to wait for something like this. I would like to wait for, on the lower time frame here, this is the 1 hour, trade into this level here, and we start trading higher, and now we are trading back up again. That right there is called being on the right side of the V, right? So you get, kind of like a dip opportunity, and you want to be trading on the right side of it. You don't want to just, trade when it's falling, because you're catching a falling knife and you don't know how deep that can go. So that is where you use discretion. It's going to take a little bit of patience there and a little bit of uncertainty, but if you can wait to see what happens when we start trading in this level, perhaps there's two outcomes. You are on the right side of the V, so you do go ahead and trade to the upside, this pullback, but technically here that we did kind of bottom out a little bit, or you can stay patient, see what happens in this level, and perhaps this level doesn't hold as well, and then we continue to flop, and then you just avoided an unnecessary loss. So that's what I'm gonna do with the Aussie dollar. A lot of the other major currency pairs are at these very important levels. Euro dollar showing some relative strength here. I'm gonna go ahead and ignore this one for now. It's still pretty elevated, but when you look at the New Zealand dollar as well, in fact, the New Zealand dollar traded up into this level of resistance, never really poked out, and now it's starting to show a little bit of a decline. Perhaps this is just a little small pullback until we trade higher, but again, I'm gonna stay out of this because I'm pretty uncertain as far as for the New Zealand dollar. On a very, very long-term play, New Zealand dollar looks really healthy at this level of support here at the 5,500 level. This is a very, very discounted level. In fact, if you pull out here on the weekly time frame, the last time we were here was 2020, 2022, 2024, and perhaps again 2025. Since then, before that, the last time we were trading below that was in 2009, 2008 area. So I'll look at that for the New Zealand dollar. So moving past the UK and European data, we do have US data tomorrow morning as well as the market's opening. We have NFP as well. That's the big one. The Fed has very much shifted its focus onto the labor market. In fact, if we do continue to see a weakening labor market, then perhaps that can be a motivating factor for the Fed to actually up the amount of rate cuts that we foresee. So if we get a weak NFP print, I do expect dollar to actually take a little bit of a decline. The 61.8% level would be a test for the bulls, but there's a good possibility that we trade back lower into this 96.5 level. If we get a strong print for the NFP, then perhaps that could be added confidence to the labor market, and the Fed can go ahead and hold rates steady for a little bit and continue on with their original intention of one rate cut for 2026. That's kind of what I'm looking at here, and that's why I do say that you got to act with discretion as far as for the Aussie dollar and the pound dollar. Aussie dollar particularly is because if the dollar does catch a bid on some strong NFP data, then this level that I was originally looking to get a pullback on will probably not hold, and it will probably continue to flush lower. So I'm gonna just have that in the back of my mind. I'm gonna perhaps wait until after NFP so I can actually trade with clarity. And if the dollar does weaken, then this is a good pullback level, right? And then we continue to trade higher on that right side of the V. If it's not, if the NFP does come out very, very strong, the dollar catches a bid, this level will most likely not hold and will continue to trade lower, and then I would just stay out of it. In that scenario, my dollar Swiss position that I'm long-term bullish on will continue to trade higher here. I'll continue to collect positive swap and hopefully ride the longer trend, the bigger picture idea up into this level of this 8,100 or even somewhere past that. The long end of the Euro curve right now is suggesting that perhaps we are going to hold more into 2026. We have the 30-year yield still trading elevated. The US 10-year yield also has had opportunity to trade lower, and it's also trading elevated. Another possible reason is just because we're waiting for that NFP, for that clarity. That NFP is going to really give us a good picture as to what the future of the US rate cuts will look like. So perhaps that's why the bond market's kind of trading where it's been. Japanese 10-year yields, I will say, is another big catalyst for this week. Bank of Japan does have their interest rate decision coming up on the 18th, so I believe that's Thursday. And so I'm curious to see if they actually commit with that. They have been prepping the markets for a rate hike, and in fact, one of the members in the Discord, his name's Marco, based out of Croatia, he actually did a personal study on his own time, and he actually found that December 2024, the Bank of Japan did a similar thing where they were going to rate hike December, and in fact, they actually did not rate hike, and then they actually rate hiked in January. The Bank of Japan did voice that they were going to proceed proceed rate cuts with caution because they do understand the circumstances and how that can affect global financial markets, because a lot of portion, not all, but a portion of the financial market or the financial system is using carry trades, right? They're using the cheap yen and arbitraging that and parking it into higher yielding assets, and they understand the implications of it. So perhaps that is another scenario that plays out. So I'll be watching that as well, and I'll definitely be keeping you guys informed on that front. But that's it for today's video, short and sweet. Going to ultimately see how the UK develops, if I can get that quick play, and then for the dollar and you know, other opportunities, I'll be looking to see how that NFP plays out. If it's weak, then the dollar will get a decline, and I'll be able to participate in that Aussie dollar long opportunity that I mentioned. And if NFP does come out strong, then perhaps that level won't hold as much. I'll use discretion, I'll stay out of it, and I'll let it continue falling. And that's it for today's video. Thank you guys so much for watching. I truly appreciate it. If you have any questions, comments, or anything like that, feel free to drop them in the comments below. But with that, I wish you a blessed rest of your day, and like always, trade safely. Bye bye.